Welcome to Virtual Coffee with Dawn Rickabaugh, the Note Queen, where we talk about owner financing and notes. Financial solutions, one mom and pop to another.
Okay, here we are. It's pandemic April. So how are you guys doing? It's a crazy time. Here we are. Anything owner financing and notes. I'm your host Dawn Rickabaugh, and I'm also the creator of the Flexible Home Economy. Actually, I've been having a lot of fun putting that together. It's a program that I created, 8 to 10 years ago when my kids were out of high school. And at that same time, I was still building my business and working really hard. And since we were all cohabbing, I was using the creative thinking that we use in the note business and with owner financing, to put concepts together to make a process that would work. And actually, coincidentally, I'm dusting that off right now, not only because, theoretically I go, you know what, with everybody at home quarantined together, probably a lot of interpersonal dynamics are coming up. You got some people with jobs, some people with not having jobs. And then I had my daughter from New York is going to be spending some time with me. And we've got all sorts of combinations of things. So I'm dusting that program off. So it's a kind of a really fun pet project that I have that, to me, I tend to see things as just different sides of the same crystal, so to speak. And so property, paper, barter, time banking, all sorts of things kind of go together in terms of how do we use our minds, cultivate our minds with enough tools to be really creative in solving problems. And that's, I guess I sort of have my ER approach. I'm not like a specialist, like, okay, I'm a respiratory. When I was in nursing, my favorite place was the ER because you never knew it was going to come in the door. I just knew that we had the tools to deal with whatever we came in. And so instead of me just going, I only do this or I only do that, it's like I like doing a little bit of everything. And then for me, being hyper local, especially right now, is a lot of my focus. Just because when things are like they are now, if one of my tenants can't pay, if one of my borrowers can't pay, if they're in my local community, guess what? We can create other ways of exchanging value. Not that we all need cash for sure in our system, but there's just a lot more opportunities for creating equitable exchanges. So anyway, that's just where my head's at lately. And I've had a lot of opportunity to talk with a lot of people that have been taking me up on the free Fridays with the Note Queen. So if you go to, I guess I can just bring that up. If you go over here to consulting on notequeen.com, hit that consulting tab, and if you scroll down, there's a yellow highlighted area here, and you can, here's a click here, and I take 2 to 3 30-minute just free calls every Friday. That I'm in the office or available. So I've really been blessed by that, and it's been a really fun thing to do. And I think maybe even some of the people on this call have been with me there. So anyway, so just so you know, there is a chance if you want to just chat for half an hour on one of my free Fridays, please take advantage of that. And then this morning before the call, if you have your notequeen.com login or whatever, you can see this is the dashboard, and I just spent some time updating my links to resources a little bit. So that's there. And one thing I wanted to me, we're in such interesting times where we have such massive change. Requires a lot us to pull out all the inner resources we can garner, all the faith that you have, all the creativity you have, all the love, all the forgiveness. And then we have like just a massive information war. And so really sorting through what the truth is on a lot of things is quite the issue of our time, I would say. One thing I want to bring, I updated these this morning, blogs, channels I follow, I highly recommend that you watch this documentary. It's only been out a couple of weeks. It's got millions of views already, even though it's being quite heavily shadow banned on YouTube. But I would highly recommend that you watch that over here. It's Out of Shadows Official. So I would say that is one of the more gentler but very direct ways of at least getting started. So with just maybe different ways of gathering information and getting your perspective on the world. So again, just go ahead if you are interested in kind of what shapes my thinking. I would suggest you go there, and then just for fun, I'm gonna pull up this latest blog post that I did. Quarantine Madness: Don't Strangle Those You Love, Create a Flexible Home Economy. So I did a little video on that, and I'm in the middle of completing a little course just on this, and so that's been really fun to do. See, similar but different. I think the last Zoom series will be a week and a half from now, not this Tuesday, but the next Tuesday. And so I invite you to participate in that if you would like. Okay, Axel, before we dig into anything else, and if you've got, I got 3 hot seats, so we're going to try to get to those people first if they're live on the call. If not, if you have a really pressing thing or something, be sure to chat with Axel. So Axel, will you do the little housekeeping things for right now?
Yeah, no problem. As Dawn mentioned, you can chat in your questions to me, and I'll field those over to her. She'll do her very best to get those answered. Call quality is super important because this is recorded and posted on different outlets and channels that Dawn has. So if you're in a noisy area, just try to mute yourself. And if you need help muting yourself, I can do that for you. And I think that's it.
Okay, thank you very much. So let's get over here to, is Carlos Santiago on here?
I don't see him, Dawn.
Rats. It's kind of fun to talk to a realtor once in a while. Is there any other realtors on this call? I want to hear for some realtors that are fairly active generally and really have a good pulse on their market. Is there anyone that can unmute themselves that can speak to that?
I mean, I'm a realtor, but I wouldn't say that I've done as many buyer sales. I try to do seller financing on my own on a house, but we ended up coming to an agreement with the seller.
This is Alexandra.
Yes, Alexandra.
Hi. Welcome.
Hi, how are you?
Welcome to the call. Yeah, on Tuesday, that reminds me. On Tuesday, I have, with the current conditions, let me show you this other place, live events. I do my live meetup is usually in person. This, I'm not sure. Anyway, let me, squirrel. Usually I do a live meetup the last Tuesday of every month in my hometown, and I really love those. But of course, everything's gone to Zoom, and I'm going to have my local realtor and my Abby Shemesh is what I call him. Anyway, he's going to be on there. So if you want to click in for that and this meetup, I would suggest that next Tuesday will be time when we're talking a lot of, what's happening in the market, what are we seeing from listings and sales, from the note brokering side of things, etc. So we should have some good contact on, or anyways, all I know is the articles that I'm reading since I'm not a realtor anymore. Of course, I did. It was one of my paths to the Note Queen, one of those educational things I had to go through. And I chose to let my real estate license expire because I go, you know what? And that there's some people that go, no, you should keep it because you can make a lot more money. I just decided that I didn't want the fiduciary responsibility of being a realtor and also an investor. I thought that could create a conflict of interest at times. Other people have done really well with a combination of that. So
yeah.
Anyhow, but from what I gather from the news, some of the headlines is that there's a lot more sellers than buyers these days. Anyone else want to echo or comment on just what we're seeing in terms of, prices haven't come down that much yet, but, days on market, sellers are all of a sudden like, I need out. And so,
Yeah. I noticed here in Houston, where I'm from, I check weekly kind of how many houses are being placed on the market, how many are going into pending, and I've noticed a 50% decrease just overall between a 50% decrease from like just even maybe the week before to now, like half the amount of new listings, half the amount of new pendings, but they're kind of like equally half. It's not like one's higher than the other. It's just, maybe the week before was about 2,000 new listings, and now it's about 1,000 new listings. And there is maybe 2,000, like 1,600 new option pending, and now there's maybe like 900 or something. So it's like it's kind of half across the board. But at the same time, I do see kind of like a decrease in that as far as how many people are listing. But there's still a lot of people listing, like, and I would agree with you with the seller aspect. But also buyers, I think if there are buyers, they're more serious because there are a lot of people afraid, especially oil and gas here in Houston, of losing their jobs, and quite a few people already have. So I've been kind of monitoring our market as far as that, since we're heavily oil and gas over here as far as the type of buyers and stuff.
Right. And this sort of uncertainty, and the ones that can get loans, what's the going rate? It's pretty cheap.
So like interest rate.
Mm-hmm.
My last couple of buyers got around like 3.125 and 3.25, kind of in that vicinity. But apparently I heard there's some places even going lower. I have one buyer who probably won't close, because he's doing new construction. It'll be like 299. It was actually a little under 3%.
Oh, wow.
Yeah.
So the people that can get financed, wow, it's really quite a time. I guess for me, and we'll probably talk about this more on Tuesday, but my strategies are just more, my cash prices for both notes and real estate, property and paper, are lower. But if I can get terms, as in buying a partial, or if buying a partial on a note, that would be my preferred thing right now, because if I have to buy a whole note, I'm buying everything as a potential non-performing note, regardless if it's performing. So my cash pricing is lower. I don't know. I should have called. I want to call. I think I'll probably do that before next Tuesday. But there's a few other buyers out there, and I just want to talk to them. What are you really buying? Has your pricing changed? Blah blah blah. And then for property, I'll buy a lot of stuff if I can take it subject to lease option or with owner financing. So I want terms. I really, unless I'm getting a killer deal in a property I really, really want, and I would have multiple exit strategies. To me, that's what I'm looking for, is multiple exit strategies. Here's my perfect picture. If option A doesn't work out, can it carry itself as a regular rental? And we know short-term rentals are really struggling right now. And if people are over leveraged, wow, are they miserable right now? So I have maybe 3-4 units, but we're doing okay. The ones that, because I have very low leverage, because I go, worst case scenario, if this plan A doesn't work, plan B will at least cover itself, So the people that have high leverage or don't haven't bought something that will cover itself as in a number of ways are really, really not so happy right.
Just a quick question. When you say a partial, is that more like a loan assumption, or what is a loan partial, or not a loan partial, a partial note?
So because I buy both property and paper. So if I'm just talking about buying a note, I would rather just buy instead of buying the whole note. Let's say it's $100,000 note. I would just rather buy the next 4, 5, 6, 7 years worth of payments instead of the whole note, then, because my investment to value will be a lot lower, because the value of the property's here. So even if the property drops, I still have a good investment to value position. So because I'm spending less money. Let's say the loan was $80,000 on a $100,000 property, And
Mhm.
and maybe because now I'm buying everything as it's a non-performer almost, because it probably will be if it isn't already. Who
Mhm.
knows? The statistics are really high. I want to say that I got an email from FNAC, and they're saying, from our statistics, we expect 23% of our portfolio to go into default of some sort.
Oh, wow.
23. And you know what? They have pretty tight underwriting in terms of credit, and they like good collateral and things like that. And they're institutional. But you know what? Banks, everything's crazy for people right now. The capital requirements and the liquidity crunch is really, I don't understand all the different things on the inside of those institutions, but it's a really interesting time. But anyway, I'm still really buying and happy to, as long as I can get terms or terms on a property. I want owner financing. I want to take it subject to. I want lease option, because that means I have 2 or 3 viable exit strategies. And wow, during this time, am I glad that I stuck to that, because the holdings that I have in real estate have very low leverage, very easy financing to swing.
Mm.
And so I'm very happy with that. But with notes, I'd prefer to do a partial. Gosh, there's one out in Fallon that I want to keep. Anyway, I need to follow up on that, see if their April payment came through, because I really like to pick that one up. Because it's only 30 minutes east of me, where I am now, and it's 3 acres of kind of ag land. It's a kind of a dumpy little mobile home, kind of messy, but like, hey, 3 acres of ag, I don't know. And it's not that far from me. So anyway, thanks for the chat, Alexandra, on
Thank
that.
you.
Hey, Axel, did Carlos show up?
Carlos did not, but George
Yeah.
Gutierrez or Jorge Gutierrez.
Okay. Yeah, a very large demand for seller financing. I agree. Because for people to get the price, they're going to have to offer terms, right? So I'm very happy to do that. Okay, let's bring Jorge on, or George. I'm sorry if I'm saying it.
Can you hear me?
Hi. How
Hey,
are you?
how are you? Good, Don. Good. I've been following you for quite a while, and
Hey,
haven't had the
stalker.
opportunity to speak to you.
You're a stalker? Oh, that's crazy. You shouldn't say that out loud. No, well, thank you very much. Yeah.
I mean, now's the time, I guess, to start learning more about notes, but everything coming up, and so I want to take this opportunity to ask you a question about a potential deal that I might have in the
Fantastic.
works.
So it looks like you have some rentals and you do some fix and flips. So you're pretty sophisticated real estate guy, would you say?
Yeah. I mean, I don't know everything, and I don't claim to have all the answers, but I've been getting into creative financing for the last year or so, and right now I got a seller finance. I got a owner who has a home, and he's willing to sell a finance, but he only wants to sell a finance for 5 years.
Mm-hmm.
And he was talking about his terms of 5 year with a 5 year balloon. He's currently he was currently collecting rent at 1,700. It's a 3-bedroom, 1 bathroom.
Okay,
The only
where is
situation.
that? That's pretty good rent for
This is in Connecticut.
Connecticut. Okay.
So he's had the property for quite some time. I mean, he
Uh-huh.
originally purchased a property for 194, and back in the 90s. So right now he owes nothing on the home.
So you know, free and clear. So that's pretty clean. Pretty clean.
Yeah. Yeah.
Okay. And then so tell me more about the deal then, and why you want it, what it's worth, blah blah blah.
Doing the comps in the area right now, and it's worth anywhere from 360 to 380 with comparables that I'm seeing. My only dilemma is right now, the way the market is turning, how much should I compensate for as far as ARV loss? And what I mean by that is the house needs a roof, but that's about it. On the inside, it's pretty much cosmetics. So I'm running through a couple of options, as I can do a lease option on it. I can also partner with him on it, as him carrying the note on it until I rehab the property and put it on a retail, or I can sell a finance it for the 5 year term that he was looking for.
So what's your goal? What's your perfect picture? What's your plan A, plan B, like exit?
I really would like it to be at a 10 year term instead of a 5 year term. but he's not willing to do a 10-year. He said by that time he'll be in his 80s and he doesn't want to have to worry about it.
That's so funny because people, I find this so interesting because people will hold rentals past their death. They have no problem conceiving of, I'm gonna die as a landlord, but dying as a note holder, they see that as so different for some reason. Well, I'll be dead by then. It's like, okay, but are you gonna like sell all your rentals right now too?
Right. I mean,
you could die at any time.
Correct. And he has another multifamily rental that he said if this deal was willing to work for him, he could consider doing something like that other rental as well.
Okay, so you would like to hold this, like, what's your perfect picture? Is this a flip for you, or is this what do you want?
It could be a flip. It could be a very quick flip if I wanted it to be, and I wouldn't have to get a hard money loan to flip it if he's willing to carry it.
Right, because even if you're a fix and flip person, always think of your seller as your first lender.
Correct.
Better. Right?
Yeah. I look at that all the time.
You can even just like say, hey, you know what? Sometimes I'm not going to pay you now, like 0%. Give me 6 months. Give me 9 months.
Yeah,
I'll pay
exactly.
you off. Then your interest rate is 0 or 5%, somewhere in there. No points, and maybe no payments until you turn it back around. So it's a much better if you can get them to do it. Do you have money to put as a down payment? Like what kind of?
I do have money to put down as a down payment, and the money down is not the problem. It's trying to put as little down as possible. That way I can move on and do other projects as well. I don't want to tie all my money up into one project.
So okay, but your problem is that's great if you will be able to flip it, and maybe you will, because I tend to be quite an optimist in terms of, I think, and I've said this before, I think we're going through, and we may continue to go in and out of kind of a nasty remodel, but I really think we're resetting and rebooting to something that's going to be much more positive for actually the entire planet.
Right, but we don't know how long this is going to go on.
We don't know how long it's going to be rough, and so you need to kind of be. To me, I would go, okay, maybe I'll be able to flip it, and things will be really good this summer, whatever. And I really expect that could be so. But you have to be in this as if that thing tanks. So
correct.
You got to be able to carry it and have some other way of it at least paying for itself. That's the job of the house, is to pay for itself. And
right. So I ran a deal to him. I ran an offer to him that if he's willing to carry it for 3 months, that way it'll give me enough time to do all the repairs and put it on the retail. Yikes. And at least if I have
3 months. I mean, even if sometimes you can't even get the yikes. Even if you got an offer your first week or two, what if it takes 45, 60 days for the buyer to get there?
And it could take, it can take 120 days for all we know. Yeah. But I don't see him being able to hold it for longer than that if it was on a flip. And then after that, if it didn't sell within the 6 months, put it into a lease option.
Yeah, interesting. So with your ARV of, okay, if I'm just taking your 360, if that's like you'd list it, would you use a realtor, right?
Right. I would use a realtor, and 360 would be the conservative price.
Okay,
as far as what I've seen with comparables.
Is it okay if we use the conservative price?
Yes.
Okay, and so what after all your closing costs, including your realtor commission, what percentage are you going to net? 92%? You got 8% closing costs, something like that?
It's about 6%.
6? So you're going to net 94% of that, let's say. You're going to net 338. So what kind of a profit margin do you want to build into this?
From my numbers were up and down. I like to make a minimum of 30,000 from what I was the numbers I was calculating, and that was at giving them an offer at 70% of ARV.
And how much to put that roof on?
I calculated all repairs under 30,000.
30,000.
And that's interior paint, doing an upgrade in the kitchen and bathroom.
Okay, so let's put 35,000 since stuff always costs more than you think. So then you've got to get what are you thinking of offering them?
So if I was giving him 70% of ARV minus 30,000 in repair, that would be my offer price to him, and then split the profit of the flip 50-50.
Wait a minute. Okay, that's a different structure. Let me see. Are you, so this says you have, this doesn't even count holding costs, carrying costs, or anything like that, or financing costs. So
No.
it looks to me like 273 if we back it in, and then minus if you have financing costs and carrying costs. I don't know what your financing costs would be, but you know, basically we're at an offer of 265 maybe to him. But if you say, let's see what you're doing here, 360 ARV times 70% of that equals 252. Okay, good. Minus $30,000. Then you'll be offering him 222. So, and then you're offering this anyway. So anywhere between like what did we say? 220 to 260.
Mm-hmm.
Is that what you're thinking of offering him?
Right.
Okay. And what does he want? Why is he selling right now?
He's at that age where he doesn't want to deal with tenants and toilets.
And he just had it become vacant or something?
Yeah, he had it rented out for a couple of years to a military vet, and he had that tenant there for a very long time. That's what he was telling me. I mean, the house is in great condition. It's not in bad condition, it's just a little outdated. So, you know, I was thinking of different scenarios which is the best route to go about it. He pretty much just wants to sell it. He doesn't want to hold on to it long term.
Okay, so what's your offer to him going to be? What do you want? If it was just thinking of a flip, cash price, what would you pay?
Anywhere from 220 to 230 cash price on the property, and he was thinking about 10% down. And then on top of that, I was thinking of giving him a percentage of the equity profit of the flip.
Why?
So, because he originally had it on FSBO as a 369, and he was getting this just, I guess, from a Zillow estimate, and his figures were all off. And then he was trying to compare it to other properties in the area that were already being flipped, and I made it clear to him that those properties are going to be priced at that because they're going to be repaired. Your property is not.
Right.
So,
okay,
just
so
trying to get him on my side.
If he'll just take it, I mean, if maybe he goes, hey, I'll just take 225 if you'll just cash me out. Maybe I'll charge you more if, you know, you get him to carry. I guess I can see that. Like, hey, if you'll so if you put 10% down, let's say you offer him 225 and you put 22,500 down, that leaves you 0.90% of that. That will be your PV or loan amount, present value. And what are the terms that you're thinking or have already talked about?
Well, I figured out if he's adamant, I'm getting 5 years, and if I can't sell it within the 6 months or a year, put it into a lease option, advertise it as a lease option, because by then it'll be pretty much
right. So if you get it at a good enough price, you have multiple exit strategies. So what's the carrying though for the 5 years? Have you talked about that or thought about?
He was talking about 10% on a carry. Jeez. At a higher. Yeah, I'm sorry, not 10%. No, 10% down.
Oh, okay.
He's willing to take 10% down on a carry at a price of 270 with a 5-year balloon.
270. Now there he's wanting a little. Well, depends. What kind of terms is he giving you? Interest only?
Interest only. Interest only.
Interest only. Wouldn't it be nice if it was?
I mean, I'm saying not interest only. So that was the other thing. He's not really too crazy about charging interest. He never even hasn't mentioned interest yet. But to make it more feasible, as I wanted it as a 10-year, and I brought it up to him as a 10-year with a 2% interest. He says no, he doesn't want to hold it on for 2 years. For 10 years.
So you're saying he'd be willing. So if we go to what he wants is the 270, if you put 27,000 down, that gives you a PV or loan amount of, oh shoot, Why do I do that? What was it? 243? 243?
Uh-huh.
And he's willing to carry 0%?
Yeah.
For 5 years.
Mm-hmm.
Interest only.
No, not interest only.
Oh,
He'd have to do it. Yeah, it'd be
amortization.
right.
Oh, so what does he want?
He wants close to what he was getting a month on rental, on as his figures.
Oh, okay. What you said he was renting for 17?
He was renting for 17.
Okay, so then let me ask you this: what were his expenses? I always ballpark 35% on rentals as I put away for reserves for taxes, insurance, and repairs. What do you think he was netting after taxes, insurance, and repairs? What do you think he was netting
I'd say about 1,300 a month.
So he's only got 400.
He was netting 1,300 a month.
Okay, well then he's lucky.
So his expenses.
But guess what? He needs a new roof. So
right now he needs a new roof. Correct.
So he's not putting enough away. If he should only expect 1,100 out of this, if he's putting 35% away, then he'd have the money to fix the roof right now instead of saying,
right.
I don't want to deal with it.
Mm-hmm.
So to me, this is the number. Okay, you were getting 1,700 times 65% of that. That's really what your net income effectively should be. But let's just say, all right, we've got to get him 1,300 a month for him to net the same. Is that fair enough? Mm-hmm. That's what I would go out. Hey, I'm getting you the same net, right? Because you don't have taxes, insurance, and repairs. So let's just see what that looks like. He wants 13. Well, there I go again. Does he need interest?
He hasn't asked for it. He didn't mention it or anything. I was thinking of bringing it up if he was willing to do it at a 10-year, but he's not willing to do it at a 10-year. So
okay. So let me just put it this way. If you get 0 or really low interest, 0 to 3-4%, but especially 0%, you can just in your mind think that you're getting this property for half price.
Uh-huh.
Because the value of that financing is so stunning that. Okay,
but what happens now? What happens now if it is at a 5-year? From now to 5 years.
Look at how good you're doing, Jorge. This is killer. This is killer. That makes up for you're paying 40,000-50,000 more than you want, but these terms make what you're paying on. Look at this principal reduction. That's amazing. Okay, so because even if you had to pay 5-7%, something like that, or a hard money rate of 8, 9, 10, whatever, these terms make up for a lot. So my question to you is: this is not a bad deal. This is actually amazing, depending on what your exit strategy is. What do you think in that area? Someone who could put down. I mean, you may easily get someone who can get a 2.5-3% loan, 3.5% loan, somewhere in there from a bank. But let's just say someone who can't qualify right now for whatever reason, but they can put hopefully 20% down. What do you think they'd be willing to pay for this? We know that people can afford 1,700. Is that market rent? Is that low? Is that high?
Oh, market rent for that specific size of house is 2,200 a month.
Nice.
Yeah. That would be market rent.
You cannot lose doing this deal, Jorge.
And the reason why I like that house is the location is literally half a mile down the road from the hospital. So
nice.
The jobs are there. That's not an issue. My issue is all the different exit strategies that I have.
This right here, 0%, even though it's shorter than you would want, with this much principal reduction, how fast that's going, that protects you so much.
So now, worst case scenario, he wants interest. Let's say worst case scenario, he comes to me with, I want some type of interest. Okay. With me offering him, let's say 2% interest.
Normally he should want that because that's the imputed tax rate, something like that. He's going to be charged as if he should have charged you interest. So, but why? It's not your job to ask him to carry interest. It would only be a negotiation. So here's what you're giving him. If he'll give you he'll give you 0%. If it's 1,300 principal only payment, that's fantastic. And you're giving him his price and solving his problem.
Right.
Is that you, Jorge, with noise in the background?
Oh yeah, I'm sorry.
Yeah. Sounds like you got a rat in your desk. All right. So you pay $270. You're in it. You're going to fix it for $30,000. Now you're in it for $300. So what you're going to want is someone who can if you're going to carry for them or lease option, you can easily get probably the higher end, $375. And if you can wrap it, which might be kind of nice, because you haven't done a lot of owner carry, right? You wouldn't be.
No, I haven't done owner carry. No.
Right. So you doing just a handful. You're not going to trigger the Dodd-Frank loan originator.
Right. No. I've been working more on lease options than anything.
Yeah. So this would be a great lease option, but since you already have 30 out of your pocket down payment, 30 out of your pocket for rehab, I would like to see you get close to that back. So if you get 20% down, you get all your money back.
Right.
So now you have zero money left in the deal, right? So now you've got a $300,000 loan from someone. So in exchange for someone giving you that much money, 20% down, you could give them a really nice interest rate. Look, 3.5%. Are you kidding? Who does that? Okay, and then I'm going to take this back to zero. I'm going to just do what people are used to thinking. Not that this means that's what you have to do. Look at that. You could take $75,000 down, get all of the seed capital back in your money, maybe even a little eat money, grocery money. And then you've got this terms play. So even if you did it this low to induce someone to give you $20,000, check out that amortization schedules. And then at the end of 60, and you give them the balloon. And you want to make sure you're setting them up for success, like they have a reasonable chance of getting a takeout loan. Look at the payoff. So look, you're making, even if you did this, you're making $47 a month passive income. You have no money left back in the deal. All your money's out. So this is only infinity return. And look at the balloon. What's their balloon? Future value. What do they owe in 5 years? $269. What will you owe that guy? $165. My gosh, there's $100,000 waiting for you. Can you see that?
Yeah.
Yeah. So
that's if all goes well within 5 years, and I'm willing to from now to 5 years, and I hopefully get somebody that's going to be able to purchase property, depending on the way.
But if it doesn't, can you see if you only owe $165,000 that even if the market dropped by 30%, you could still create something that makes sense?
Yeah.
Something you can do. But anyway, if you compare, just print out those amortization schedules, and at any month that someone executes, maybe you're okay leaving some money in, you take 10% option fee, and give them 2 years. So then you go, in 2 years, what will they pay? $288, and you got 10 back. You're leaving some money on the table. To me, it's a less of a risk to get all your money out, because then if the market drops, you're not having money stuck in this thing long term potentially. So but 288. And then on the deal, we said you would have a 243 at 0%, 1,300. Okay, so then let's look at that amortization in 24 months. They owe you 288, and you only owe 210 to the guy. I mean, there's a lot of money, 78,000 spread. So if you look at this, it just gets like astronomical. So if you get 0% financing on something, consider that's the equivalent of getting the property at half price.
Okay.
Hmm.
So we're able to do 0% financing. It doesn't affect anything with a Dodd-Frank or anything like that, even on a 5-year balloon, right? Because I was reading something on the Dodd-Frank Act, and I don't know if it was kind of throwing me off as far as terms on a seller financing with the 5-year.
If you're a small mom and pop and you don't do a ton of these a year, you don't
Mhm.
have to worry about. I mean, you do it wherever you can. You don't like to put homeowners up against a maturity date where they could lose money. Safer to do that with a lease option than someone who's on title, because trying to foreclose in Connecticut could
Yeah,
not
it's a nightmare.
last long.
Mhm.
I've had to do that a time, at least once, and no. I don't like that. Yeah, I was lucky. I got out even Steven. I didn't take a loss. That was lucky. But I would say you could do a lease option, but that means you're probably leaving a lot of your own skin in the game on it. But it could make still a lot of sense. It can make a lot of sense, because if you take 10, what would you think you would take as an option fee on this in your market?
It'll be less than 10, I think. I think maybe anywhere from 5 to 8%.
Let's go 375 times 0.8. So you're going to get, that's 30,000 down. That's pretty good. So if you've
that's me being conservative on those numbers. I don't like to right now with the market the way it's going. It's hard for me to say definitively if I could even get the 10% on an option. That's why I say anywhere from 5 to 8.
Okay, I like being conservative, and then you're happily surprised if it works out better. So really, if you put 60 out and you get 30 back, you only have 30,000 left in this deal.
Mm-hmm.
We said you got $47 a month passive income on our pretend, or no, that was a different. We'd have to do the different numbers for the lease option, but you can see even if you did this as an owner carry, and then remember at the end of 6 years, there was $100,000 for you to get.
Right.
So what happens if you had to leave $30,000 of your own money locked up in the deal? You only made a tiny spread, because then what you're doing is, I'm not saying you would, but this is the bottom. I wonder what the yield is on your 30,000. Any guesses? When I press this I/YR, what do you think it's going to be?
I have no idea.
Let's see. Okay, good. You're making 25% on your money, relatively low risk, right? That's not easy to do. Now, if you take 20% down, that's infinity return, and it will break my computer. Watch this. You have no money left in the deal. You're getting 47 a month, and you get 100,000 in 5 years. Error. So it's you're always trying to get an error on your financial calculator. Then you have really put together a killer deal.
Okay. So this would even be appealing to somebody that would even lend me part of the money.
It should be. If they have to trust you, and they have to be the biggest thing about people not engaging, like there's people that will leave their money at 0-1%, right? Because that's what they feel safe with. There are a lot of people who would love to make more money. They just don't feel comfortable with the asset class, or they don't trust your track record. It sounds like you have a reasonable track record, so you could probably sell that, and you could say, hey, the first 30,000 is my money, right?
Yeah.
And so I got my own skin in the game on this, and so you make sure that you set it up so they know that you're highly motivated to make sure they get paid, because you don't get paid till they get paid.
Right.
But yeah, you easily should be able to do that. But the most valuable thing that you can do to create passive income is to develop capital partners that will go in with you. The lower your cost of capital, the higher your profits, and without even having to be the rainmaker. You don't have to do anything. You don't have to create a new business of being a wholesaler or a note broker or anything like that. You can take notes that are already out there. You develop the cheaper capital and say, hey, Mr. Smith, I know you've got 500,000, basically less than 1% in your bank account. But trying to get those people to be comfortable with the asset class is the biggest struggle. If you go to the, investors like me or your real estate clubs, everybody's yield hungry, right? You're gonna need to pay 8% and up to people who are like in the business, of notes and real estate. So the best thing you can do, the most valuable thing you can do is, if it's not easy for you to create leads, then develop capital partners that are happy with 3, 4, 5, 6%. And then you can make a lot of money and solve a lot of problems.
That's great.
That deal that I did back in February, it was, I bought it for cash, but I ended up paying off my hard money lender because I had to have the money. We closed in 2 days, which I've never done that before. But to get my family in there that I wanted to carry for, I had to get rid of the 10% hard money loan, and I had to replace it with this lady in town who she thinks that, and she's totally happy with, she thinks 4 and 5% is a great return. And she only cares about the story of why it matters. So she lent this family, they had, I gave it to him about 50,000 below market value, and I still made good money. And this lady loaned them the money at, they had 10% down. Did they? Or was it more? 250? No, they had 20% down. They had 20% down, and this lady loaned them money long-term at 5%. So I want more of that money in my town. If I had more people that have a lot of capital they're comfortable with the asset class, but they don't need the sophisticated investor returns of 8 and above. Wow, can I put a lot of deals together for people? And so she's going, yeah, well, I usually get 2 to 4%, with this and that and that. And now she's down a third because of the stock market. But anyway, blah, blah, blah. So hopefully somewhere in there, you found value in coming on the call, I hope. Is there any last questions before I move on a little bit here, Jorge?
No. You pretty much answered all my questions in all different scenarios I can come up with.
You know what? I'm excited for you.
Well, I hope this one works.
You got a deal here.
I hope so.
That's fantastic.
He's anxious today on me giving him the final numbers because we've been going back and forth for about a month.
Yeah, so make it happen, Jorge. What are you waiting for? Get off this call right now. I want you to hang up and go make a deal. Well, thank you so much. That was a really good case study. That was a lot of fun. I like that.
I appreciate you. I appreciate all your time.
All right. Take care.
Take care.
Okay, Axel, I'm taking a breath. We've got 10 minutes left. How'd that happen?
Well, we have one of the hot seats jumped on. His name is
Slava?
Yes, correct.
Slava, hello. He's got to get unmuted. How are you?
I'm very good. I'm joined for your coffee virtual conference from Israel.
You're from Israel?
Yes.
What time is it?
Interesting in the note business, and because of this, I saw your ebook, and I start reading, and I take a course in Israel in someone who invests in the notes business in second line, and now I need to sell my assets in Israel to invest in notes. Because of this, I start to reach people that know this business and share the knowledge of the area.
Well, cool. Well, welcome. And what is it? 9 o'clock at night or 10 over there?
In Israel, it's 8 o'clock p.m.
8 p.m.
Because of this, I don't understand how, because in the email it's written like 8 p.m. And because the difference of time zones between Israel and the USA. I thought it will be in the Saturday, not in Saturday. It will be in Monday morning,
Oh,
4 o'clock.
funny.
About our, but if this is the hours, it's very cool.
I wonder, if you've been hanging around, there was a guy named Henry Dvorkin that was kind of one of my most important mentors in the note business, starting back in the mid 90s and early 2000s. And he's the one that, just a good old guy. His name was Henry Dvorkin from Wichita Falls, Texas. So I guess Henry Dvorkin. So is Dvorkin a Hebrew name, or is that? Yeah, you're saying
The last name is Dvorkin, not D-E.
Dvorkin. Okay, I apologize.
D-V-O-R-K. Dvorkin, but this is the small change of last name.
But anyway, so he's one of my favorite people. He was one of the ones that said, at the end of he kept saying, Don, don't try to broker notes. Don't try to broker notes. Think like an investor, buy a note, develop your capital partners and buy a note. You'll learn more and build more wealth investing in notes and not trying to flip notes. So, and he's the one that I was scared to death after years of studying it and going to all these conferences. I was scared to death to buy my first note. And he was like, I go, Henry, and he just like, bless his heart. He was like, sort of, I would say my father in the note business, really, because he was so generous, just salt of the earth kind of a guy. And he held my hand every little step of the way when I bought my first note. So anyway, I'm glad that you're interested in this. You're to want to become an expert. You want to make 50% on your money. Okay, that's awesome. I would like to do that too. Not familiar, passive income. So are you just getting started?
I'm in the beginning of the way because I finished the course of note investing, and now after I figure out of strategy of investing, I now wait to finish the coronavirus to sell my property and take the money of the selling and the invest in the notes, because from Israel it's more difficult from some ways of taxes and the registration of company in the USA, because I'm not I'm not an investor from USA. Because of this, I need to start a company, open a bank account, and more.
Okay.
It's more difficult in with the time zones, and but for me it's very interesting because I'm have a first degree in financial degree, and when I start my career in the realtor of Remax Israel, I start interesting in investment, and after this I became that our system in Israel it's not very not very friendly for investment in real estate.
Okay.
And because of this, when I heard about the note business, it's something amazing, because of it can happen only in USA. In Israel, it cannot happen.
Because USA.
Yes, American dream.
USA. Okay. Anyway, so on this links to resources. So number one, 50% returns, even buying non-performing notes as an average is unrealistic. Just so you know, like if you're saying, I'm just going to buy a bunch of non-performing seconds, let's say, like if you're partnering, the guys, and I may be wrong, but just based on what I've come, they're happy on average, these funds, if they are getting in the high teens for an average return, 17, 18, 19, low 20s maybe. So, and on performing notes with, it's less than that generally. So you can go, I don't have to worry about it, but I'm going to be making 8, 9, 10, 11, 12%. depending on the risk and all that. But even taking the risk of non-performing notes, average over portfolios is not as high as some people think. You can make a killing on one, but you can take it in the shorts on two others, right? So the average portfolio, especially if you're new, you have to partner with someone. So then they're going to say, you put up all the money, I'll manage the fund, and I don't know, those be some arrangement like that. So the only way I know to make 50% on your money is either be the deal maker and you make a whole business yourself, or you do some of these strategies of leverage. You in the deal we just were talking about with Jorge, there's a potential for an infinity percent return. Or if he leaves 30,000 in, but this is a property deal, playing the property and the paper part of it together, he leaves his 30,000 in, he's going to make easily a 25% return. But if he gets all his seed capital out, he'll get infinity return. You can't even calculate it. It's not even 1,000. It's not even 1 million. It's infinity, meaning he has none of his capital left. If you do lease options or a wrap where anything where you put down 5,000 down, and then on a lease option and you turn it around to someone else for 10,000, you not only got your money back plus 5,000, so you got paid $5,000, and maybe you're out of the deal. But a lot of times you can keep a remainder interest, and there's either a monthly spread and or a spread at the end. So there's a way to stay in it or to just sell it out. So those are the other ways to make really above average returns is to carry paper on property you own, where the interest rate that isn't super high. And I've done this example before that can kind of be invisible to people. Let's say, if you don't have a big spread, like let's say someone comes to me and says, I can sell this property for 300,000, but someone is going to expect like a 5% interest rate, and I don't want my money growing at 5%. And I said, okay, let's see. If you sold for 300,000, and I'm just going to show this real quick, because I can show you where you can make above average returns that are hidden, and you get. So I'm going to go times. They put 10% down, 30,000 down. So you've got a note from someone at 270 who I'm going to put this to 0 to make it fully amortized. 360, 30 years. Let's say it's only at 5%. No, let's make it. Okay. Oops. Not 56. 6%. Okay, 1618 is the principal and interest, P&I, every month. And there you go. But my money, my 270 is only growing at 6%. And then I go, well, how much did you pay for the property? Okay, and so then they'll go, oh, I only paid 100,000. So, and what have you put in improvements, blah, blah. Okay, another 15,000. Okay. So now you have 115,000 is your all-in cash price. Now take back the 30,000 down payment. That means you only have 85,000 really of your own hard capital at work in here. And I understand that there's a lot of taxation issues here. I understand this is a simplistic view, but I just want to show people that there's more ways to think about it. Really, you only have 85,000 left in there. And so think of that yield as 22% on the 85,000 of cash that's locked up in there. Because if you take out all that money cash, you're going to have capital gains of some right. Then you got to figure out how you're going to invest it at more safely at more than 5 or 6%. And most people actually can't do that. The average person can't do that. Make a safe 5-6% on their money. But even so, you can see if you look at it this way, it's over 20% and are super safe, secured by a property you already know with someone who's got skin in the game, and hopefully their credit isn't too terrible. The better the credit, the more valuable the asset. And I can't believe we're already out of time. But so just before we, thank you for being on. I really appreciate that. That's very special to have someone from out of the country on here. But I would just say that check out these people on my site. Other people and groups I recommend you connect with, because it's all about your network and who you know. It's what you know, but it's really ends up being your connections and your relationships. So that is the most important thing. So I've updated this aspect as well. Other people and groups I recommend you connect with. So there's a lot. That's just my people in my area. There's other great people. I just don't know everyone. How come I don't know everyone? Okay. Anyway, does that help a little bit, Slava? And thank you for spending the time to be on.
Thank you very much. It's very helpful, and I will take a part in the future virtual coffee.
Okay, thank you, Slava.
More people in the business and make some relationship in the business.
Yeah, very good. That's just how you start. So anyway,
thank you very much.
Thank you. I always appreciate you guys coming to this. I love it so much. And so like I said, I'll be doing the meetup via Zoom next Tuesday evening around 6 p.m. Pacific. And then the little flexible home economy a week after that. And anyway, I just want to remind you to get back to the basics. Right now, it's about enough sleep, eating the right things, exercise, sunlight, meditation, yoga, things that, just the basics, because we need to stay grounded and learn to develop and listen to that inner voice so that we're not just here, there's so much yah out there, and it's good to tune in a little bit and to be as discerning as possible. But at the end of the day, the only voice that matters is the one that you can hear from the inside that guides you what's your right next step. You're never going to get the whole road. You're only going to get the next right step. I want to remind you to use your powers for good and to go out there and create financial solutions, just one mom and pop to another. Thank you so much for being with me. I love you all very much. Bye-bye.
You've been listening to Virtual Coffee with Dawn Rickabaugh. For more, please visit notequeen.com.